Theta Log, February 1st, 2023. Going to start with something a little bit new. The research team will be putting together some videos regarding the different components of the V3 specification. And so I'm going to start by putting also a little bit of an overview to act as a supplement to what they'll be putting together. And then as the weeks progress and I go through the different components and main feature sets of V3, you guys can ask me questions in the Discord, and I will then answer them on these weekly Theta Log calls. So starting this week with the base layer. The base layer is where settlement will happen, where P&L will be decided, where that's calculated and then settled. It's obviously where trade execution and matching will happen. It is where you'll be able to select the parameters of what you would like to underwrite, whether that be specific expiries, pairs, strike prices, and different premium levels. That full parameterization will live on the base layer. Now, that full parameterization and settlement happening on the base layer allows for layers above that to add additional functionality, which I'll get into in a further week. Right, the permissionless pool deployment. We were actually even started working on some of the Oracle adapters today, but the permissionless pool deployment, all you need is an Oracle. Probably at launch, we will only allow on the front end Chainlink oracles because those are going to be the most trusted. There will be a process for getting the pools shown on the front end, and on launch we will allow for custom oracles, Chainlink oracles, third-party oracles, TWAP oracles. Some adapters will be needed. However, that will all happen and be configured on the base layer. Right, the tick-based accounting and range orders allow for additional strategies to be used, for example, a straddle, as well as for limit orders to be placed. And again, I think some of the coolest stuff that comes in V3 is that, okay, it can settle at the base layer, but there are different layers in which the execution can happen. And I think that's what's going to provide a lot of the value to V3, which you may or may not be aware of at this point. And then last, position management, buy to close, different order types. You saw that all in the white paper. That happens and is supported at the base layer, as well as the fee collection that then goes back to staking users. That is all what encompasses the base layer. And then in the next week, I'll go through the vault layer, where is also where liquidity mining will reside. So regarding updates this week. So this week and next week, we're doing product scoping for V3. And what that entails is we've put together a list of all the different high-level items and features, an epic, if you will, of everything that needs to be implemented for V3. It's a super comprehensive list, and underneath every one of those epics is different stories or tasks that need to be completed. And so we're going through all of those, that comprehensive list between all the different teams, and then doing a prioritization and effort-based for what remains. So I'm sure that you've heard me speak about this before. It's most likely going to be a phased release where we'll get things such as the base layer, the vaults layer, the messaging network, all done upon initial launch. And then margin and collateral will come subsequently a few weeks after that, probably around 6 weeks. And then the omni-chain functionality will probably come roughly 6 weeks after that. That's the high-level estimates that we're looking at right now. But obviously at the extent of next week, when we finalize that, I will make sure to share that with the group. One thing I want to talk about is liquidity mining emissions, right? So it's roughly around 2.25 million a year across all the chains. 450,000 is emitted on Mainnet, Phantom, and Optimism, and 900,000 is emitted on Arbitrum per year. Now, with VX Premia being an OFT token, which means that you can freely move it between the different chains, we are looking at rearranging that allocation based on the amount of influence as a percentage of the whole. So you might have seen that last week in my video, I looked over the different levels of influence and the percentage allocation between the different chains. And it is likely that towards the end of the month, being February 1st today, towards the end of the month, we actually take a look at those weights, and then reallocate those total yearly emissions based on those weights, and then whether we reevaluate and change the different chains that those tokens are emitted on, we can kind of decide as a community if we want to do that monthly if you want to do the quarterly, so on and so forth. So we'll make sure to announce well beforehand what the record date will be for those total weights. So make sure that you have your VX Premium on your the chain that you would like to allocate the weights to, and we will get moving forward with changing the allocation points so that each chain respectively changes that total amount emitted per year to be in lockstep with those weights. Right, and so I've been talking about the Council of 10 since December. We can call it a special council of 10, whatever the name may be. I'll be releasing some documentation on that this weekend. What that is we will have some members of the community step up. There will be elections held to select those, 10 members of the community. Those members will be then introduced closer into the fold of the development pipeline. We'll continue to have tokenomics sessions. There will be your liaisons for the wider community in those kinds of discussions. They will see the feature sets that are within V3. They will be some of the early beta users will, go to them and lean on them for user feedback. My expectation is that they both are active members in the community, but then also power users of our platform so that they can help in all regards. The newsletter was published on Friday. Go take a look. Super happy with what Weka and KB put together. In addition with Marathon, one of our writers, and Carbon and the whole marketing group. I think that was really well put together. Everything that I had wanted and more. I don't know if I'm sold on the name, but maybe I'll get there. Still working on token terminal requirements. Some of the issues that came up last week didn't allow me to do that. I will continue to work on that, and the team will continue to work on that this week. And then another thing that we have been started ramping up discussions on is the Academy, right? So we've been spending quite a few weeks on putting together the content on the Academy. What the Academy will look like is it will be course-based material, maybe be options foundations, maybe more advanced strategies, and then we'll teach you just what the base use case is, what is a call, what is a put, and then how do you purchase a call or a put on the platform. We intend to, maybe not at launch, but shortly thereafter, to have a verification process similar to a layer 3 quest in which that we can, ensure that you did take these actions. And then upon completion, you will receive some sort of certification that you did complete that, as well as we are starting to work with different groups to see if we can do and maybe we'll do them ourselves, a learn to earn type of mechanism where you get a little bit of capital, relatively minor amount of capital, and then you can use that to deposit or to pay for premiums on the platform to then have some value for make the whole experience valuable, both from a learning capacity, but also monetarily. So we'll give you a little bit of capital to start using the platform, so that if you have been intimidated before, we can increase the adoption and make it easy and demystify what options are. Regarding development, all right, so you may have seen on the launch on Friday, unrelated to Nox, I outlined that there was an outage on Arbitrum. There was a malicious pool that was deployed. It was able to kind of circumnavigate some of our pool checks. However, upon the subgraph trying to interpret this pool, because it had been allocated some votes, it was unable to interpret that. So it brought down the front end, unfortunately. It exposed some things to us. For example, it did bring down all of the Arbitrum. So even though Nox Vault was unrelated and the only thing that was actually affected was voting, and it was pretty minimal. I think it was roughly 300 influence in votes that was applied to this malicious pool. However, the trading was brought down, the Nox Vault was brought down. So in the future, what we plan to do for V3 is to then segment out the parts that are dependent on the subgraph to be non-critical, and then we'll be looking to either increase our RPC utilization or actually thinking about potentially just running our own node, full node on Arbitrum, especially because V3 will be primarily on Arbitrum, to kind of alleviate that. So we'll have a critical component of the RPC endpoints pulling all of that information live on chain, and then the subgraph components that are non-critical will will continue to be housed in a segmented way, so that if the subgraph were to go down in any way, shape, or form in the future, that will not bring down all of the different features on the site. Like I outlined in the post, it was relatively immaterial. We were able to capture, fix the code, and deploy fix within a few hours. So the 300 influence allocated to that pool was relatively minor in terms of the amount that was emitted to that pool. So we deem it immaterial. However, Nox users, especially participants that wanted to partake in the auction, weren't able to as the site was down. So we have already made the compensation allocations to the users that had deposited and were allocated positions or contracts due to the auction. Because the auction wasn't up, there wasn't a fair auction in terms of the pricing of those allocations. So we went ahead and compensated the difference for market pricing on those options. Look, we don't anticipate that there will be any issues in the future, and we don't anticipate any more transactions regarding these auctions and the Nox products in a whole. So we don't think that there will be a need for anything like this in the future. And we have another AMA a week from tomorrow to go through any questions that you may have. I think that we're over 200K in deposits on those vaults as of now. We anticipate that to continue to go up, and then starting with the auction a week from Friday, we'll have some accurate return numbers and yield numbers for you. And so following the AMA a week from Thursday, we should have all those numbers up on the site so users can see. Regarding statistics, right, so TVL week over week relatively unchanged, about negative 5% in ETH. Volume has been on a tear lately. We've seen about 4 million in volume, which is a 55% increase week over week, and premiums roughly about 102K between the 22nd and the 29th, which is the 28th and the 29th. You can't really see here, but we saw roughly 35K in premiums on those days. We continue to see increased volatility in the markets with the Fed number coming out today. And today looks like it's going to be another heavy volume day, so happy to see that. In other terms, we applied to an Optimism grant today that would go hand in hand with our Academy program to try to onboard more users to Optimism, to teach them how to use the platform on Optimism using OP tokens as the default unit for that learn to earn components. And then with some of that grant being utilized, if we do receive the grant, to be used to deepen the liquidity of the OP pool so that options are fairly priced and that we can accommodate different sizes orders than what's currently on the platform, as well as we've been I think tracking roughly about a 15% return on the OP pool, and so yields that were generated on behalf of the protocol for those would be continued to be reinvested into the Academy program. Dominance volume has been increasing. If you look at some of the numbers of our competitors, some odd numbers on their behalf, but they seem to be coming down in alignment with what we had expected when we looked at on-chain activity. And with that, we're normalizing. You can see that we're steady at about 20% of volume on DeFi Llama across the 4 different protocols that are on there. And it continues to hold steady. So we're happy with that increase. And then, again, if you've been in the Discord this week, there has been a good tokenomics discussion. It continues to be ongoing. We're getting a lot of good ideas. We're seeing we're seeing some proposals. Thanks, Fluffy, for adding that. Thanks, Horny, for helping out, and Dempa and Sminem, the whole crew of helping us navigate that conversation and bringing forth meaningful ideas, right? So we're open to a lot of things. We moved forward some of the tokenomics CoinGecko updates, since we haven't updated that in roughly 2 years. So you'll see those movements. We put in that transaction to move some things around into there'll be 16 additional smart contracts that are kind of outlined for different allocations. And then we will let the community know of those 16 different smart contracts. So those allocations go to what some of the underlying components are in terms of the wiggle room that we have regarding the different decisions to be made in the near future. So you'll see those on-chain movements most likely tomorrow, and then the API has been deployed for circulating supply, and that will also, once those effects take place on-chain, then we will complete that ticket. It's ready to go. I'm just waiting for that 3-day time lock transaction to go through so we can reallocate those assets, and then go ahead and finish that CoinGecko chain. So hopefully by the beginning of the week, the CoinGecko number will be a little bit cleaner, considering that it hasn't been updated in 2 years. All right, thanks everyone.